Welcome to Fear and Greed, the week ahead. This is where we take a look at the big events, reports and releases coming up this week that give insight into the economy and a look back at what happened last week too. I'm Sean Aylmer, and every Monday I'm joined for the week ahead by economist Stephen Koukoulas. You'll find him at thekouk.com, TheKouk.com, and on Twitter using the handle thekouk. Stephen, good morning.
Good morning, Sean.
It's such a big week coming up, but first we'll have a quick look at last week. CapEx, interesting figures last week.
They were, Sean. Look, we know that these figures were for the September quarter. Lockdowns in New South Wales, Victoria and the ACT for the bulk of that September quarter. So we had an overall fall of 2.2% in CapEx in the September quarter, concentrated in the ACT, New South Wales, and to some extent in Victoria. Most of the other states recorded an increase. But what was really important in these numbers were the expectations data that the Bureau of Statistics asked business. They sort of say, how much are you expecting to invest in the next financial year? And that figure was plus 19.7% from the same survey a year ago. So to cut to the chase, that's actually saying that the businesses are looking to ramp up their investment in machinery and equipment, in buildings and structures and these sort of things by almost 20%. So if that actually comes to pass, 21-22 financial year will be an absolute corker, with business investment really coming to the fore and really adding to that positive economic outlook.
Well, that's last week. We'll be back in a moment to get into the week ahead. I'm with economist Stephen Koukoulas, aka The Kouk. Huge week for you economist types, Stephen.
Oh, look, it's one of those great weeks. It's always good when the national accounts come out. They're going to be showing the September quarter GDP numbers. And again, as we were just saying on the CapEx numbers, we know that it's going to be a negative, that half the country was locked down, really limiting their spending. We do know that business investment was down in the quarter. So the consensus at this stage is for GDP to drop by around about 2.5% for the quarter. And in normal times, if that was happening, you would think, oh my goodness, that's an utter disaster. The economy is going backwards at an alarming pace. But we know why it happened. And we know how we responded last year when the lockdowns ended in 2020, that there was a really sudden rebound in spending from consumers, from businesses investing again. So I think we'll largely look through this result and instead focus on what's happening now that the borders are reopened, and just how strong the rebound will be from what will be a low point in the economic cycle with this GDP figure that's coming out this week.
Now, we've just had the biggest auction weekend of the year, with record numbers of auctions in some of the capital cities. The CoreLogic house prices will be interesting for the month of November on the back of what's happened in the auction market. And it certainly is, the heat does seem to have come out somewhat.
Yeah, it seems to have come out. So the CoreLogic house price numbers for November will probably be up around about 1%. So some people paint that as the weakest growth in probably 6 months, but nonetheless, 1% per month. Yeah. 1% per month is still 12% per annum, roughly. So it's still a pretty robust increase. That said, there's a lot of evidence that momentum through the month, because don't forget CoreLogic publish their data on a daily basis. And just in the last few weeks, there's been a cooling in the price growth in Melbourne and Sydney, the two hottest markets. Perth has been weak. Brisbane's still very strong. So with the auction clearance rates sort of showing some signs of fatigue, that big increase in the supply of dwellings on the market, and perhaps some buyers hitting that sticker price, paying that much money is something that they don't want to do. The chatter of interest rate hikes sort of getting a little bit more profile in the media and therefore in people's minds when they're bidding for a house is probably going to just suggest that we are in the early stages of a cooling in housing. CoreLogic numbers won't really show that. And over the next few months, we'll be looking very, very closely at these auction clearance rates and prices for, a genuine sign that the heat's coming out of housing.
Okay, we also get balance of payments figures. We're expecting a huge surplus. Just explain, many years ago, we talked a lot about balance of payments. It doesn't sort of seem to hit the headlines so much nowadays. What is the balance of payments and what are you expecting?
The key aspects of balance of payments are our exports and imports of goods and services, plus what we call the net income balance. So goods and services, we understand that's, exporting iron ore and importing phones and things like that. Services are things like tourism and education. So that's a relatively easy thing. But they also include these invisibles, which is when a company or a fund manager here buys shares in a foreign company and that foreign company pays a dividend, that's an inflow to us.
Mm-hmm.
So it's a plus, if you like. It's not an export, but it's a net income inflow. And similarly, when a foreign company owns shares in some of our big listed companies or own our government bonds, for that example, the interest payment on the bonds or the dividends that a big company here might pay to the foreigners is an outflow. So that's actually part of the balance of payments. The goods and services component will show a huge surplus. But interestingly, as our local fund managers have accumulated more and more and more money and they've been looking to offshore to invest their money, we've actually got approximate balance or even a small surplus in this net income balance. We're getting as much money in as is going out. And that's very different from, the Banana Republic years of Paul Keating in the mid-80s where, we had such poor levels of savings in Australia that we were paying out heaps of dividends and heaps of interest on our government bonds and we weren't getting much back in.
Superannuation. There you go.
Yes, it's simply that. The superannuation, they've got so much money that they have to invest offshore.
Yeah. And a few little, credit growth, international trade, guide to bills, talking from the bank, all interesting.
Yeah, all little things. Credit growth will show that housing credit is still increasing at a solid pace, as we just discussed with CoreLogic House Price Series. International trade, well, that is the goods and services. Look, we're probably going to have a deficit. Goodness, there's my ancient history coming to the fore. We'll have a surplus of about 10 billion, I think. Some of the commodity prices have just come off a bit and some of the iron ore export volumes are down a bit, but still a chunky surplus. And Guy Debelle, yes, he's giving a talk. The RBA board meeting next week will be their last for the year, obviously, and their last for a couple of months. And, the market's clamouring for a bit more guidance on whether they're genuinely worried about inflation, whether their guidance on, no hikes until 2024 is still valid. So we'll be watching Guy's speech later this week with a great deal of interest.
Enjoy your week, Stephen.
Thanks, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.